Something is shifting beneath the surface of the American economy. Not in the stock market, not on Wall Street, but in the homes, kitchens, and checkout lines of everyday people. You can feel it even if you can't yet name it. Because right now, American consumers, the very engine of this country, are starting to break. Spending is slowing. Debt is exploding. Savings are evaporating. And the first cracks are beginning to spread through the real economy, quietly, before they turn into something impossible to ignore. Yet if you turn on the news, everything still looks fine. Holiday sales are record-breaking. The job market is strong. Confidence is stable. But those headlines are a mirage. The real story is happening under the radar and inside the wallets of millions of Americans. And if the consumer breaks, the entire US economy follows. So in today's video, I'm going to take you inside the numbers, behind the headlines, and into the truth of what's happening right now and what comes next. Hit subscribe, and let's begin. Before we go any further, we need to ground ourselves in one simple truth. A truth so obvious that most people overlook it. The American consumer is the American economy, not the Federal Reserve. Not billion-dollar corporations trading tickers under bright lights. It's the everyday person walking into a grocery store. The family filling up their gas tank. The young couple replacing a broken appliance. The parent buying a birthday gift on a credit card they hope to pay off next month. That's the real engine of this country. And that engine drives nearly 70% of the entire US GDP. Think about that. This massive, complex global economic machine, the one economists debate on TV and politicians fight over on stage, turns on something incredibly simple. Regular people spending regular money. When households feel confident, the economy hums. When families loosen their budgets, businesses expand. But when the consumer slows down even slightly, the gears begin to grind. Momentum fades. Inventories pile up. Businesses hesitate. And eventually, the entire structure starts to wobble. This is why every crack in consumer behavior matters. A smaller grocery basket, a delayed purchase, a canceled trip, a shift from want to need. Individually, these moments feel personal. Collectively, they ripple across the economy. And now, those ripples are turning into waves. Households are signaling stress in a way we haven't seen in years, and yet, the headlines still insist everything is fine. But nothing reveals the truth about consumer strength more clearly than what happens during the holidays. And this year, something is off. Let's look at the illusion behind record holiday spending. Every holiday season tells a story about the American consumer. But this year's story is being told in two languages: the headlines and reality. If you look at the headlines, the message is loud and confident. Holiday spending hits all-time highs. It sounds like Americans are back, wallets open, spirits high. But step into a store or scroll through an online cart and you'll see a very different truth. People aren't buying more. They're just paying more. Inflation has rewritten every price tag. A toy that cost $20 a couple of years ago is now $30. Even the basics, the essentials, quietly climbed. So yes, total dollars spent are up. But the quantity? Down. The enthusiasm? Fading. The confidence? Cracking. What we're seeing isn't prosperity, it's pressure. And behind those big record numbers sits something even more concerning. Debt is doing the heavy lifting. Credit cards, buy now, pay later. Deferred payments wrapped in cheerful holiday marketing. Households aren't spending out of abundance, they're spending out of necessity. And they're borrowing to do it. Retailers feel it too. Fewer items per shopper. More window shopping. More abandoned carts. More people are waiting for deeper discounts right up until the last minute. This year, holiday spending is not a sign of strength. It's a stress signal, a warning flare. Because when Americans have to borrow more just to buy less, something fundamental is breaking. And the next place this breakdown becomes painfully clear is in the explosion of household debt and the disappearance of savings. Let's go there next. If holiday spending showed us the first cracks, household debt is where those cracks widen into fractures. Because right now, American debt isn't just rising, it's erupting. Credit card balances have climbed to the highest levels in US history. And this isn't the kind of debt people take on to upgrade their lives. It's the kind you take on to survive. Groceries, gas, utilities, unexpected bills that used to be annoying, now feel dangerous. Auto loan delinquencies are rising too, inching closer to record territory. People aren't missing payments because they're irresponsible. They're missing payments because their budgets simply can't stretch any further. And then there are personal loans. Traditionally, these loans were used for consolidation or big-ticket plans. But today, for millions of households, they've become a financial band-aid, a way to fill budget gaps just long enough to make it to the next paycheck. But no band-aid lasts forever, because while debt has exploded upward, savings have collapsed downward. The pandemic savings cushion, the buffer that protected families for a couple of years, is gone, drained, evaporated. Most households don't have a few $100s set aside, meaning a single flat tire, a broken water heater, a surprise medical bill, can push someone right back into high-interest debt. Think about how fragile that makes the foundation of the consumer economy. Spending is slowing, debt is accelerating. Savings are disappearing, and when people no longer have savings as a safety net, they fall back on the only net they have left, more borrowing. It becomes a cycle, a dangerous one, where every month feels tighter than the last. But this financial pressure doesn't just come from personal choices. It's being accelerated by something bigger, something unavoidable, the rising cost of almost everything, and that rise is hitting Americans from every possible direction. Let's break that down next. If debt and shrinking savings are the cracks, then rising costs are the weight pressing down, widening every fracture in the American household budget. Because right now, everything costs more. Not just a little more, but consistently, relentlessly more. Start with insurance. Auto insurance premiums have surged 20%, 30%, even 40% in parts of the country. Homeowners in several states are watching their property insurance climb so aggressively that some companies have simply stopped offering coverage altogether. Utilities, the quiet bills we used to ignore, now demand attention. Heating a home through the winter has become noticeably more expensive. Electricity bills that once felt manageable now strain monthly budgets. Groceries, still elevated. Every cart tells a story. Fewer extras, more essentials, more trade-offs. Rent has remained painfully high for years. And healthcare, doctor visits, prescriptions, routine checkups continues its steady march upward, squeezing families who are already stretched thin. This isn't one sector misbehaving. It's the entire cost structure of American life shifting upward at the same time. And right as households struggle to keep up, another pressure looms over the horizon: policy-driven price increases. Recent signals of tougher trade stances, including the possibility of new tariffs, may sound abstract or political on the surface. But tariffs don't hit corporations first, they hit consumers. Because higher import costs almost always show up where Americans feel it most: the checkout line. In a moment when families have no financial cushion left, even a small rise in prices becomes a meaningful burden. It tightens the budget, it reduces spending power, and it accelerates the slowdown already unfolding beneath the surface. Households are being squeezed from every direction: higher costs above them, higher debt below them, and shrinking paychecks in the middle. And speaking of paychecks, the job market is quietly shifting too, not in headlines, but in the lives of everyday workers. Let's uncover that next. If rising costs are the pressure and debt is the symptom, then the job market is where the deeper story reveals itself, not in official reports, but in everyday paychecks. Because despite headlines describing a strong labor market, millions of Americans are experiencing something entirely different: a quiet slowdown. Not the dramatic front-page layoffs that shake the stock market, but subtle cuts, the kind that rarely make the news but absolutely reshape a family's financial reality. Hours are being reduced. Overtime is disappearing. Companies are freezing hiring instead of expanding. Contract workers are being trimmed or quietly released. Early retirement buyouts are being offered, especially in government sectors. And performance reviews, the ones you hope will boost your salary, are increasingly being used to justify letting people go. None of this shows up clearly in unemployment numbers. On paper, everything still looks stable. But in households across the country, the truth is obvious. Paychecks are shrinking while costs keep rising. A worker who once relied on 5 hours of overtime now gets 0. A family counting on a year-end bonus finds it eliminated. A contractor who used to have steady work suddenly sees long gaps between assignments. The impact on consumer behavior is immediate. When income softens, spending slows. When spending slows, businesses earn less. And when businesses earn less, they cut deeper, creating the very downturn everyone hoped to avoid. It's a loop, a cycle, one that begins quietly, beneath the surface, and only becomes visible to the broader public when it's already well underway. Right now, we are in that early stage. The stage where households feel the pressure, but the headlines haven't caught up. Where something feels off, but no one can quite point to why. But as consumer spending weakens and job income tightens, the next phase becomes almost predictable. So what happens from here? Let's walk into the coming economic loop and what it means for the months ahead. When a slowdown begins, it rarely announces itself with alarms. It starts quietly, with softening spending, rising debt, thinning savings, and shrinking paychecks. And then, almost predictably, the economy enters a loop, a cycle that feeds on itself. Right now, the US is stepping into the early stages of that loop. Here's what happens next if consumer spending continues to weaken. 1. Retail sales begin to fall. Businesses notice fewer items per purchase, slower foot traffic, and tighter customer budgets. What looked like strong holiday numbers suddenly softens once inflation is stripped away. 2. Corporate earnings start missing expectations. Companies guided by optimism will have to confront reality. Lower revenue means lower profits, and Wall Street reacts quickly. 3. Public layoffs follow. What begins as quiet job trimming eventually turns into official announcements, the kind that hit news cycles, investor calls, and social media feeds. 4. GDP growth slows. Because when the consumer pulls back, the entire economy loses its primary driver. Even small reductions in spending ripple through supply chains and service industries. 5. Media begins using the word recession again, not as a hypothetical, but as a serious possibility. You'll start hearing phrases like economic headwinds, pressure on households, and revised forecasts. 6. Pressure mounts on the Federal Reserve. As cracks widen, the Fed faces mounting demands to make borrowing cheaper, cutting interest rates to support growth and ease financial stress. This loop doesn't unfold overnight. It builds, quietly at first, then loudly, all at once, the way a dam holds until the moment it doesn't. And for many Americans, this turning point won't feel like a headline. It will feel like something much closer, a tighter budget, a missed opportunity, a bill that's suddenly harder to pay. But while we can't control the loop, we can control how prepared we are for it. Which brings us to the most important part of this video, what you should do right now to protect yourself and position yourself wisely. Let's get into that next. So now that we've walked through the cracks forming beneath the surface, the slowing consumer, the rising debt, the shrinking savings, the hidden job cuts, the question becomes, what can you do, right now, to protect yourself? Because you are not powerless at this moment. In fact, preparation is the one advantage everyday Americans still control. Here's where to start. Build cash wherever you can. Even small amounts stacked consistently create breathing room. Flexibility is a superpower during uncertain times. Cut unnecessary spending. You don't have to keep this economic machine running on your shoulders. Protect your household, first your four walls before anything else. Avoid new bad debt. This is not the moment to take on loans for things that lose value. Stay lean. Stay liquid. Protect your income. If you can add a second or third stream of income, even a small one, do it. The era of relying on one paycheck is fading. And most importantly, stay invested, but stay disciplined. Dollar cost averaging has built more long-term wealth than market timing ever has. Panic is expensive. Consistency pays. Delay big upgrades. Hold on to your flexibility. Prepare early so you don't have to react late. Because when Americans run out of money, the economy suffers. But individuals who prepare ahead often find themselves in a stronger position when the cycle turns. Now, I want to hear from you. Are you feeling this slowdown in your day-to-day life? Are you cutting back? Or using more credit? Or noticing hidden job pressures around you? Drop a comment below. Your experiences matter, and they help others see the bigger picture. And a quick disclaimer. This video is for education and information only. It is not financial advice. Always make decisions based on your own situation. If you found value here, if this helped you understand the economy a little more clearly, do me a favor. Hit the like button, share this video with someone who needs to hear it, and subscribe to the channel. Every day, we break down the American economy in simple, real-world language so you can stay ahead, protect your money, and make smarter financial decisions.